focus on how to interpret the likely moves tomorrow, the market, and also a check on RBI policy expectations. We'll be joined by a very special guest, Jagannatham Thunuguntula, Equity Head at SMC Capitals, will be with us in a short while. Welcome back. Let's take a look. All right, let's do a quick dipstick on the markets before we go across to our guest. The Sensex Nifty, just want to flag them off before we go across to my market guest for the day. Nifty, Sensex both ending near the day's lowest point. The Sensex is still a tad below 18,000. On that note, I want to take it to Jagannatham, who's with us. Let's talk about markets first. After the 52-week high that we saw last week, today was a slightly subdued session, and the point I'm making is earnings. Maruti, JP Associates, numbers were negative. The stocks got hammered. Does that mean that the numbers or the companies that don't perform as per expectations, they're going to get a drumming out there?
No doubt, because the market has already factored in as much positives as possible. So any kind of underperformance from for whatever reason, I'm sure market doesn't have the patience to accept it. On top of that, when we have rallied so much, it was almost guaranteed expectation that Indian carpet world will keep delivering. And if analysts and market experts started believing and started building up a kind of view that as if it is a guaranteed phenomena. I mean, like the growth of India is taken as a guaranteed theme. So that is where one area one has to be a little careful, because now probably we have to live in a fact that we are getting into a moderation of growth pattern, and normalization will be the theme of the time. So while India will keep doing well, but I think we have to reduce our growth expectations, because the base is growing, and secondly, there will be every growth generally comes with other kind of stresses that are already started picking up. This time the automobiles have disappointed, and today the share movement is almost understandable. As far as market performance is concerned, again it is very close to that high band, and it is almost inevitable that it has to come down, and today it has come down. And I don't think the market has enough momentum or energy and conviction to really rally past. However, as they say, when the momentum is on, anything can happen, but it is better to be sensible than chasing this rally. As did by Malvinder Singh.
We'll talk about that as well, but let me talk about the numbers tomorrow, because tomorrow is a big day in terms of earnings. We have Reliance Industries, we have Larsen & Toubro, a couple of other big names, Hindustan Unilever. So I believe a lot of index stocks tomorrow are detailing earnings. Yeah. Anything you're targeting, especially on the big ones, L&T, RIL?
Yeah, as far as L&T, I think they will be, I'm sure they will surprise the market again, probably with order book size and with even the conversion of order book into sales. As far as Reliance is concerned, I think there may be some pressure, because their retail segment is still picking up, and then even their margins are appearing to be slightly unstressed. It's almost a while before Reliance has really given a blockbuster kind of performance, and because share prices are also almost indicating that it is not expecting any big bonanzas and anything. So I think, and moreover, probably we'll get to see their plan about selling of their treasury shares, because even they have growth plans. So probably to fund that growth, probably there may be some indication about how they want to sell some of their treasury shares. So net, it's a very big day, but I think at least not from I don't think there will be any big performance from the Reliance, because it will be a moderate growth scenario.
Moderate growth scenario. Okay, let me come back straight to Fortis Healthcare. All over the place. Yeah. Finally, the deal has been consummated, and Fortis opting out. Do you think made prudent sense? 3.95. Decide to go with Khazana. 3.8 is where they bid, and clearly Malvinder was saying that beyond 3.8, the valuations were stretched at 3.8. He admitted that, but saying that at 3.95 makes no sense, and being a promoter-driven company, it makes sense to get out.
Yeah, I mean, so if you are ready to sacrifice front page coverage, so definitely deal makes sense calling it off, because beyond a point, this is as I was mentioning to you, that if it is a CEO driven company, probably most likely the CEO would have gone ahead because of understandable reasons. If it's a promoter driven company, after all, it is his baby and it is his money. Naturally, the tendency of putting value to that money will be more. So understandably, they have given it up, and probably they will choose organic growth route, because everything comes with a cost. I mean, if Parkway is a great asset, it's fine, but you should everything is good at certain price. As they say, if apple is good for health, you have to pay 10 rupees for it, not 1,000 rupees.
Very interestingly put. But The kind of growth that Fortis is talking about, both organic and inorganic, in terms of inorganic growth, where are the opportunities? Because Parkway in itself was considered to be a very lucrative asset. That's why there was a huge bidding war. But now that it's gone, in India as well as in the Asia Pacific region, do you think there are other attractive assets that perhaps Fortis could have an eye on?
Probably may not be that attractive as much as Parkway, no doubt. But there is no requirement or necessity that one has to go through inorganic route only. One can choose organic route. Point taken that it will take little more time, but probably it will make sense in terms of value in the money outflow. And one more thing, as rightly said by Malvinder, if in this transaction, if the money is going to the company, let's say if Malvinder is investing into the company at let's say $4 or $3.95, still it makes sense because money is sitting with the company. So even if it means paying little bit more price by the Malvinder. However, in this case, actually the Malvinder Singh brothers have to pay this money to the outgoing shareholders. Technically meaning thereby the company is not getting benefited with this huge outflow of the buyers. So that means from that context, the buyers are not in comfort zone, nor the money is sitting with the company. So net probably it made sense to that extent. Understandably, the market has rallied. In the past, we have seen at the time of Tata Steel Chorus deal or Tata Motors Jaguar Land Rover deal that irrespective of your surnames, even if you do a transaction at very stretched valuations, you are going to face the market ire.
So perhaps valuations. Steep valuations made more sense for Malvinder to perhaps tender in his stock. All right, let me shift focus, talk more macro. RBI policy tomorrow. Any key takeaways you have on this one?
If they don't increase, I think it will be a very big surprise. I mean, I'm sure 25 basis is almost on cards, and if not 50 basis points. And if they don't do, probably they may find themselves behind the curve for sure. I don't think they would like to find themselves in such scenario. Most likely they will go ahead and they will increase the hike. Probably CRR hike may not be, because after the 3G spectrum sale, a lot of liquidity being sucked out of the market. I'm sure D. Subbarao must be happy after that spectrum sale, because at least he escaped some of the blame by increasing the CRR market anger. So at least that anger went through 3G spectrum of the sucking the liquidity. So as far as repo, reverse repo, it's almost a guaranteed phenomenon. At this level of inflation, if you don't contain inflation, it is as good as growth has no meaning.
But let me stick to that inflation point of view, because the last month numbers that came out and even the last few weekly numbers see a substantial hike in the fuel component. So how does an RBI rate hike, I know indirectly it does, but what are the other ways RBI can curtail inflation? Because rate hike is the most obvious aspect. They do 25 basis points perhaps is even factored in, but beyond that, how do you curtail the inflationary aspect which has come in from the fuel price side?
Two things. I mean, as they say, if it's a demand push inflation, naturally you can contain with by taking out the liquidity from the market or by increasing the cost of financing. But if it is a supply constraint inflation, naturally you cannot do much. I mean, whether it be oil related or whether it be food related, both are close has the issues with supply side, not necessarily with the demand side. So because of that, probably the hiking of the interest rate may not have a, let's say, one-to-one relationship, but in macros, always you have to put some percentage. That means every basis point move in terms of interest rate probably translate into certain percentage point of containment of inflation. Not necessarily it's a one-to-one direct relationships. To that extent, yes, it is excusable. But if they don't increase, it is not excusable.
Not excusable, but talk about the kind of language RBI may use, because inflation has been their top priority. But that aside, the growth versus inflation argument that we have on RBI, how do they manage that? You mentioned a point on credit availability. That is also a little constrained. So RBI doesn't have too much of a headroom in terms of going ahead and hiking a CRR. That is not the case. So what kind of language could they use, and could they actually see, or could they actually trim down the growth outlook as well?
No, I don't think they will go thus far, because as far as growth pattern is concerned, we are talking about 7%, 8% plus. So it doesn't matter whether it's actually 8% or 7.8 or something like that, because beyond a point, it's all about perception. Because secondly, with a combination of 8% growth and 11% inflation is less meaningful when compared to, let's say, 7.5 growth and let's say 6% inflation. So 7.5% growth and 6% inflation is more logical. For example, China, 12% growth rate, 3% inflation. So I mean that makes more sense, right? So it's even if it at the cost of sacrificing some of the growth, as it is standing today, it makes sense. Containment of inflation as the top priority.
All right. So, based on that premise, post this 25 basis point rate action that the RBI is expected, are you expecting something more by let's say by the end of this year? What is your target?
In fact, I think at least from here, I think 2-3 rounds maybe definitely on cards. I think they will take it as it goes. And moreover, from now, inflation will keep getting their base effect advantage, because by the time of we see next 2-3 months, by October, November, I'm sure the base effect will take care of some of the inflationary tendency. And it also has a lot of bearing from monsoon, because monsoon is going well. Definitely, there is no much concern on that front. So food-related inflation can be taken care by monsoon. And if the base effect is kicking in, inflation automatically comes down. Probably, and that scenario, probably they'll take a call about how to go about it. As it is standing today, I think 2-3 rounds may be easily expected.
2-3 rounds, that's a big one coming in from Jagan. Let me come back on the market implication for this. From the auto and from the real estate point of view, real estate has been completely down and out. Auto, till about last quarter, was holding up, but I think there are now some chinks appearing in the armor. Do you think on one hand we have the aspect of higher input cost pressures, on the other hand we have the aspect of inflation, higher interest rates? So from the domestic demand oriented sectors, for instance auto, real estate, this is perhaps not the best time to be in them?
Yeah, in fact, interest rate sensitives are bound to have some pressure for sure. I mean, and having said that, automobile had a fantastic time. I mean, last 1 year, I think almost a dream run they had, both in terms of stock performances as well as the corporate performance. I mean, you cannot ask more than that. Having said that, one cannot expect the economy to stand by alone by the support given by the government and the RBI. So economy has to stand on its own legs. Otherwise, technically, you are putting the pressure on the government balance sheet. So for enabling automobile companies to get super profits, putting the pressure on the government balance sheet is not probably the logical way of doing the things. So maybe the growth rates of and the profit margins of automobiles may get moderated a bit, but from the keeping the larger picture in frame, probably as of now containing the inflation is the more critical point. I think it's okay if you sacrifice a few basis points of profit margin.
All right. So inflation versus growth argument this time could go in favor of inflation, and perhaps it's more important to curtail inflation, and perhaps growth can be compromised a little bit, but still growth remains on track. Jagan, thanks for joining us here on Profit and all those vital aspects you talked about, stock specific and how to interpret the macro views. But